Hello everybody, it's Craig Cobb here for a weekly market commentary looking at the dollar index for the ICE markets. And guys, I'm filling in for Nick McDonald this week after having a conversation with him late last week. We were of the same opinion as to what's likely to occur this week, and I just want to relay that message to you. And really with the dollar index, things look a little bit more bearish now, but there's a few things we need to be very aware of this week. Now, the first thing we need to be aware of is that it's Thanksgiving on Thursday, so there will be limited trading hours Thursday, Friday. So check out the ICE website to find out the exact times if you are to be trading around those periods. Again, on Thanksgiving, I hope you all have a fantastic Thanksgiving and enjoy lots of food and good times with family and friends over that little period of time that you guys have. And I wish you all the very best on that particular special day. Looking at the dollar index now, a few things have occurred since Nick spoke last week. First of all, we did see some bullish momentum come in on this particular day, but then what we've seen, interestingly enough, is a roll back over, and we've closed once again underneath 81. Now, we talk of these round numbers. If I just draw it in here, 81, you can see tests here, tests here. It is a very good reactor. Round numbers on the dollar index are very good reactors for trading opportunities. 80, same sort of thing. I mean, we look to trade around these numbers, both to the long and short side, depending on what conditions are like at the time we test those particular round numbers. Now, looking now, last week when Nick did this video, he was saying that it was still below 81, which I believe it was this candle here, and it was this candle here, and that he was looking for bullish moves. Now, we moved down a little bit, and then we did see some bullishness come back in, and since then we've seen it reject and roll back over, once again underneath 81. Now, what this means in my eyes this week really is if we can break down through, let me just move this line, these lows here, then I would suggest we will see a run to 80. Okay, we'll see a short move down to 80 at least, and we'll have to assess it once we get to there. But I would suggest if we can break this low here, we'll see moves to 80. On the other side, if we break this high here, then I think we'll see moves up to 82. So we're kind of in a position right now where it's kind of crucial. We haven't really shown that much last week, but we've shown a lot. I know that's a strange thing to say. If we break down below here, then we've got a lower high, and the downtrend on the daily has then resumed. Therefore, the momentum is to the downside. Therefore, a move to 80 is highly probable. If, however, we come back up and trade higher and break above this high, we now have a higher low, and an uptrend has resumed on the daily, and therefore 82 is likely on the cards, and possibly even all the way back up to 85 based on us reaching the bottom of this range. Now, if I come up and have a look at the monthly, that range becomes much more apparent. Now, you can see here it's been in range for quite some time, and it's a very strong level. On the monthly, we rejected that level, hence why Nick was looking more bullish than bearish, and I certainly agree with that. We now need to start to assess what's actually going on here, because we've moved up higher, and we've rejected, and we are in this zone between the 10 and 20 period moving average. So it's a crucial time for the dollar index. Coming and having a look at the weekly, another reason why leaning more towards the short side than the long side, obviously based on whatever occurs this week will confirm that, is the weekly. And we saw a bearish candle on the weekly. The weekly is still very much in a downtrend. It's broken the low of the weekly. It's tried to continue higher. It didn't. It's closed back down below 81, and it is also a bearish candle. Now, because of this, it does definitely look a lot more bearish than bullish at this stage. But again, if we come down and look at the daily, it certainly is going to be dependent on whether or not this level gets taken out, in which case short. If this level gets taken out, then I'll be looking for longs. We'll have a look at euro dollar here because it's the most weighted for the dollar index, and see if that helps us with anything. And it does. With this here, we see this bullish candle in here. We've also seen a break to the higher side, looking very similar to the dollar index, except for euro dollar looking a little bit more bullish. So euro looking bullish to a bearish dollar than what the dollar index itself is, but it is broken the high of this candle, and it is starting to look a lot more bullish right now, which would be bearish for the dollar index. Another one that's kind of been bucking the trend a bit here is dollar yen. There's just been a lot of weakness on the yen pairs last week. They had a lot of activity, and you can see here this is showing a strong dollar but a weak yen. So there's conflicting messages on our majors here when we look at the dollar index. One saying strong dollar index. I think it's more sort of saying a very weak yen. Well, not think, it is showing a weaker yen, but the euro is certainly showing strength again that of the dollar. So we have to come back really and have a look at the dollar index itself to make our decisions. And really, I'm not going to budge too far from what I said at the very start. If we can break down through this low, I'm looking for shorting opportunities down to 80. If we can break up through this high, well, I'll be looking for long opportunities to 82. And where will I be looking for those opportunities? Well, if we have a look at these lower time frames, like the 15-minute, not a lot happened around 81 apart from a break. If we have a look here, you can see we talk about going to the lower time frames and finding trading opportunities. Let's have a look at this round number, how we saw tests coming into this 81 level. They are specific, they're exact, and then as soon as we saw that break, we saw a nice move away. Okay, that's the sort of thing I'll be looking for this week, around these levels, around this break level, and around any round numbers. Now, that being said, when we're looking for trades like this, we also need to look at our lower time frames to make sure that we have a confirmation of trend there. At the moment, we haven't got a confirmation on the higher time frames and as to what the trend's doing. That confirmation will not come until this level or this level is broken. So I am this week on the Russell more bearish than bullish. However, I will definitely become a bear selling to 80 if we can break down through there, through this level. If we do break down and test back up into those levels, looking for shorts would be my preference. If, however, we do see a change of heart and we break up high through this level, then I will be looking for long opportunities up into 82. If we can pull back into these levels, I'll be looking for trades up. So I know it's a period at the moment, guys, where we are having to be somewhat patient and waiting for the signal. But the good news is that I'm pretty sure that we'll see something this week, provided it happens before Thanksgiving. Have a fantastic Thanksgiving once again, ladies and gentlemen. Have a great trading week, and I wish to speak to you all very soon. Bye for now.